Hello folks, I'm Ellie Little, and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Looking at supply and demand, folks, that's what it's all about. We ask ourselves each time, what did the market tell us today, and what might that tell us about tomorrow? I do the show 4 times a week. I do it Monday through Thursday, live at 9 o'clock Eastern Time, here from the base of the Rocky Mountains. We're starting to fall out a little bit here. I don't know about the rest of the country. I know it's been pretty tough weather the last week or so over most of the country, actually. And that doesn't change these markets, though. These markets, it's infinite hang, infinite up for our markets. Has been for a long time. They don't want to give it up, folks. They haven't done it yet. I don't know when and if they will. But right now, these old markets just keep rocking along here. So today they were trying to take them down again. They couldn't really get anything going. Let's see what our ending numbers were. Down 52 on the Dow, 1/3%. 15,973. The S&P's dropped 5 3/4, 180. 1,800 and 2.5. So right at that 1,800 area. That's kind of the key area right now. Actually, 1,802 is about the key spot today. Composite, what is that? Down 8 1/4, 40, 60.5, down to 20.2%. NDX basically flat, down 2 points at the end of the day, 35.14. Russell was the big loser again. That's 2 days in a row now. That's 1% almost today. 1119, 69. We had gold spike today. Gold was up something like $30 today. It's basically flat after hours. Silver was up huge. Gold was up 2 1/4%. Silver up 3 or so. Oil was up again today. The dollar was down again 1/4%. The bonds actually were up again. They're down a little bit after hours. And that pretty much sums it up there. They were trying to take the markets down all day long, and they really couldn't do it. But what we have is what we've had, and that is if I pop over, and I'm going to start where the action is, and it's not our markets, it's Europe. If we pop over to Europe again, and I keep coming back to this because, folks, I believe it matters, and that's the CAC 40, the French market. Last night, you remember we were looking at it last night. It was coming up. We were talking about it trying to do a bounce. It got no bounce. I mean, there was just nothing here. You got up there, right? You got right up to that resistance zone. There was actually 2 spots it was coming to. This is where it was trying to get to. I guess I ought to get the right instrument here if I'm going to draw. Let's try that again. Long day, folks. All right, so here we come. We come up here, right? we get right up into that resistance zone. You can see it here in red, and I've kind of outlined it there. You come right up into it, and you go no farther, none whatsoever. You take that ABCD structure. If this thing breaks tomorrow, folks, it's going to be ugly, and it's going to be a fast squeal, if you will, down to the other side. This market in Europe is screaming something's wrong. And it's not just, I mean, if it was just one market, I mean, the FTSE, for example, has been lagging for a while, but the FTSE's been lagging because there's a lot of minerals, companies, mining companies inside the FTSE. Here, you're seeing production, you're seeing industrial production, I believe, is the issue. You're seeing those numbers go down in France. It was unexpected. You broke multiple swing point lows. You just broke another one, here last week. So you got the big break there. You broke another one there. You broke it on the weekly. If I pull the chart back over, you broke it on the weekly, right? This thing is setting up for one big move to the downside. You're trying to break the next. The next one is down here is where it's trying to get to, 39.27. 39.27 would actually turn the intermediate term time frame bearish, and it would turn the long-term time frame sideways. So if this in fact does the ABCD down, it measures right into that guy, and if that's what happens, it's going to be a problem. If you look at the DAX, the German DAX, maybe you call it sympathy, whatever you want to call it, but it's the same pattern. And these patterns that show up like this, they're really, I mean, some folks talk about an H pattern, right, where this thing comes down, around, and back down. It kind of looks like an H. And that H, when it breaks, right, can lead to a fast move to the downside. Well, in particular, the DAX has the same problem the CAC's had. It's got the same issue now. And that is that you just broke a swing point low, and I'm on the daily, right? That was the break right there. But you've got them lined up down here to break again. If this is an ABCD structure down, and you measure it out, it's going to take it down below those breaks. A break of that area is going to lead to a faster move on this time frame. Now, on the weekly, just like our markets, the swing point low on the DAX is quite a ways down, right? It's right here at the bottom of this bar. And that price point is 84.89, right? A break here is at 89. That's another 500 points. That's 8%, 7-8%. It's not going to make it there. It's not going to make it there and break that. But you can certainly get, if this thing breaks in terms of this ABCD structure, you can definitely get the move down here on a faster move as a result of this break, even push beyond what that measurement is. Or even if that sets up that way, potentially set up the next one, right? So, Europe is a problem. Whatever's moving Europe is an issue. Once Europe plays out, we'll see, once it plays out in the sense that if it breaks and these ABCD structures do actualize, which they look like they're going to, we'll see if we can be immune to that. I got a sneaky feeling we're not going to be. I'm coming over to the FTSE now just to see what it looks like. And it's setting up an ABCD structure as well. Yeah, it is. It's doing, so the FTSE now is doing a retest regen. And it's not really a retest regen. So anyway, FTSE is, it's got the same thing, right? You got the same problem here. This one's just weaker than the others for a longer period of time. This thing's been coming down for a while. So now you've got another ABCD structure that's set up inside this. It's going to try to take it back towards these lows. Europe's an issue. If I look at before I go back to our markets, I want to quickly look over at the stronger markets in Asia. Hong Kong's been one of them. Hong Kong up here testing the highs, and still can't do anything about it. It's failing at the highs. It failed up here, and now you're coming back again. Now, so far, Hong Kong, on the positive side, Hong Kong's holding that higher range. I mean, that higher range, it has not given up, right? This area up here. So the breakout was here. That higher range is holding. That's a good thing. It looks like it's going to try to test it tonight. We'll see if, the lower end of that range again tonight. Australia. I don't know what's happening in Australia, but this guy is under severe pressure. Tried to bounce last night and gave it all back up, closed at the lows. Volumes pressing down here. This thing wants to blow out this low on the weekly. That's going to be multiple swing points on multiple time frames, and although it is stretched, that could lead to a faster move as a result. If I go look at the Nikkei, the Nikkei probably is going to have some pressure tonight because the yen was up. But this Nikkei can't get back up to the highs and test it. And the other one that was strong was Taiwan, the semiconductors. And let's see what that one looks like. Yeah, still going to try to test the top. It failed at the top day before yesterday. Yesterday. Today, nothing. It's going to try one more time, it looks like, to try to get over it. Let's go to our market. So the point of starting there is that I do believe that the world markets are tied together, even more so now than ever before, primarily as a result of all the central bank activity. I mean, they've more tightly coupled the world together than it had been prior. SPX, let's look at the SPX. So domestically, what do? We get a little drift down, no big volume, right? Just we came within 2 points of a high yesterday. It kind of says it wants to go up there and test it. It sure looks that way, but it doesn't have to. This thinking is drift right back down. This is a range that's been in effect now for quite a while, right? The last range was in here, and that was in effect for, what do we got here, about 6-7 weeks, about that length of time there, right? Now we're in the higher range, right? We've been up here now for about the same length of time, about 5-6 weeks. So we are getting to the point where we're going to set up some sort of a break, either top side or downside. The top side, of course, you got a high up there now that can be tested. You've also got a swing point low down here. The most important thing for our markets, and we're quite a ways away from it yet, but if you get this break, right, then you're going to get the retest regen, which probably should regenerate. The low on that retest regen is down into here. So if it actually gets deeper, and then, let's just imagine some sort of a thing like this, a bounce up. Notice that our markets also now, they've had enough time, they've set up multiple swing points together down here at the lows. Right, you got one there and you got another one here. So this area down here, right across there, is a serious problem area if it were to break. Now we're quite a ways away from that, and that's a stretch to even think of that when you're sitting up here at the highs. But if this does start to roll, in particular if Europe starts to roll, or doesn't start, but really starts to roll, right? Pressure on us, you come back down, you break a swing point low, that gets you into a deeper test of that retest regen area, because we haven't tested it yet. It should hold the first time, get a bounce, right, and then potentially you set up ABCD structures going into next year if it lays out that way. But we're a long ways away from that. That's a huge stretch to even bring it up. The issue is the European markets in my mind, and the only market showing really any kind of downside pressure right now is this Russell, and the Russell is going to try to get back down and test the low. So Russell is the only one. Well, actually, I take that back. Remember last night we talked about the Nasdaq tried to break out and failed again. Well, today volume picks up a little bit and it comes back in. So the Nasdaq again respecting the failure from yesterday. Let's see if the NDX got over the highs and back under tonight. I don't know if they did or not. So the high yesterday was 35.24. No, they didn't. So they didn't get to the high. Had more volume. So that's coming off the top with a little bit more volume. And let's quickly look at the Dow. I saw that I think it was either Visa or MasterCard tonight split 10 for 1. I know Visa's in the Dow. I don't know about well, I know MasterCard isn't, but I don't know which one split. I'd have to go back and dig the news back out. Dow's not doing anything. I was glancing at the sectors before I came on. There's really nothing happening here. I mean, I saw, let me get these up here. I saw IYT starting to come in some. It went over the top, back under. It's still ranging. Most of these are range trading. The one that I was most interested in, I brought to your attention already. So there's the IYT. It just failed at the highs again. SMHs is the one. SMHs, they had the breakout over multiple swing points. And those swing points, they were lined up here one after another, right? And it went over all of them, right? And it started the faster move. Well, you should get 2 to 3 bars expansion off of it. We got one bar, right? You got the breakout bar and one follow-up bar. And then today you come back in. Now, mind you, the volume was nothing today compared to, the breakout stuff here, right? But that's just weakness. That's when you see that kind of action, that's weakness. This is going to come in and do a retest regen right away, which off of multiple swing point high break, it shouldn't do. It should just extend away. But, such is the market right now. Again, these are subtle signs, but they're signs. They're signs that things are not quite what they have been. And I'm not going to go through all the sectors. I'm going to pop over and look at gold and silver in the aux markets, and then I got a couple questions that were emailed to me. So let me go look at those guys and see what they look like. Actually, another one just popped in, so let me get to those. Gold. Let's see what gold did. See if there was any volume or not. It was trying to, gold wanted to come back up and do a retest regen. And it's almost there. So the retest regen is off the lows. This is what we were talking about it would try to do. And I think it actually got there. Let's see what the numbers were. So that low was 121.85. Yeah, it closed over at 121.90. Got to 122.32. So it closes back into it, doesn't have the volume. Okay? You'll probably get a little bit further test tomorrow, and then you'll see gold try to pull back some. Now, this is where it will get interesting on gold, because gold has been in, here's the weekly over here. Gold has just been in it's just a down move over and over and over, right? I mean, you get some sort of a little bounce, you down move it. You get a bounce, you down move it again, right? This actually was a nice little ABCD structure that just about finished, I think. If gold can, test up in here a little bit, come back, right, and hold maybe this bar or hold down into this area where the support is, then you get your ABCD structure and you'll try to go back up again. A break of this one gets you the next swing point, and that's the one that it's going to try to get to, in my opinion, the big bar. And that high, or that low, I should say, on the big bar, that's the one to watch eventually, 125.15. That would be the number. That ABCD structure probably would take it right about to it. Let's see, silver was stronger today. Let's see what silver did. Where are you, silver? Silver, there you are. Silver had been weaker on the way down, stronger on the way up today. Actually, it was stronger in the sense of the move it got, but it didn't even get to the swing point low yet. So I believe, in fact, gold will test again tomorrow based on silver here. Silver is going to try to get into this low. That low is not that far away either. That's what do we got there? 1988. And it got to 67. So silver should test into there, fell tomorrow. That will be where gold falls as well, probably. and then we'll see how they pull back. Okay, TLT, I'll show that one real quick, and that's it. I'm going to flip over and do some of these stocks people are asking for. And there's the TLT, so really nothing there. Little bounce, no volume, but it did get away from the breakdown potential. It may be setting up another ABCD structure to try to break it out, though. We'll have to see. Okay, I had one question. It was actually an interesting question. It's a broader question. It says, what do you think the significance, what do you think is the significance that the USO is holding up okay, yet the OIH is breaking bad? So like Schlumberger, Halliburton, there's a number of these that are starting to break. The question here is, do they look shortable on bounces? I probably should have started with the OIH, but we'll start with Halliburton since I have it up. Yeah, they do look shortable on bounces. It's just they're in different phases. For example, here's Halliburton, just broke a swing point low, extended the downside. This had ABCD structure here, right? Finished it off to about right there. Now you have the next one. It's from here to there, right? And it's just, actually it's not even an ABCD structure because you didn't get a higher high. Not by my count, at least. Yeah, so this is still extending. It's still extending off that first one, which is way overdone at this point. I'm looking at the weekly here to see what's there. So the big bar on the weekly comes in at this price point. That is 48.77. We traded today to 49.14. I would think you're going to hit it, and that's where you get your bounce finally. And then that will set up the next ABCD structure. And it will be a large one. Let's see. Let's see what these other ones look like, and then we'll look at the OIH. USO, yeah, it's holding up, but USO, came off the highs already. So it's not like the USO is still doing its thing. National Oil was another one. You can see the ABCD structure here. Looks like it just completed. So Halliburton's close enough to where it should bounce, right? These guys are going to bounce. Can they be shorted into a bounce? Well, all of them are showing resistance zones on the way back up, and yeah, I think that possibly they could. It's just that I think it's hard to short anything in this market still. And, because you're trading against the trend when you're doing it. You really need the general market to give you an indication that it wants to break down. So I've got the OIH up real quick just to see what it looks like. Yeah, this, I don't see anything good on the daily chart. If I look over on the weekly, it looks okay, but man, there was nothing on the way up. So this thing can easily trade. This thing can easily trade back in and start breaking some swing point lows. Yeah, if you're gonna pick on a sector, energy is a struggling sector. So that would certainly be one to look at. I can't disagree with you. So that's the general, and one other thing I wanted to talk about, I was thinking about when I saw this come in earlier today. The whole market has a problem with the way it's set up. If you look at, let's go back to November because that's where this move began, right? And I'm on the OIH right now. That low, just do the numbers. That low is 36, roughly 36 and a quarter. You got up to 51. That's $25. Excuse me, $15. Did I do that number right? Yeah, 36 is $15. So it's roughly 40% move, right? Folks, 40% a year on an index, on a sector. That is a long way, right? And look at this one. Where is anything in terms of support? There's no wide price spread bars whatsoever. The last one was here, and it was a down bar, right? There's one there, maybe you could count that one. There's no volume expansion anywhere, and yet you did 40%. Okay, now if you're going to do 40% on the way up, what are you going to give back? Right? You're going to give back a good portion of that if and when this market finally starts to give it up. So this is the dilemma in the whole market. And the way these things will set up, and that's one of the beauties of the neoclassical system, is it sets up the lows all the way up. So you can have a good indication of when this thing really is starting to turn trend. Right? That's the one thing that you don't see in most systems, or hardly any system that I've ever came across. You have an automatic governor, if you will, in terms of slowing you down on the way back, giving you measurements. 4664 is the number. It's probably this one, yeah, and they're all set up the same way. This is where I start seeing danger every time I look at it. Now, we're not quite there yet. This being one of the weaker sectors, we're getting there. But these two price points, right, daily here, weekly there, they're the same guy. You break this one, that means you broke that one. That means multiples, right? Multiples, and what does that do? That leads to fast moves down. I don't know how many times I have to say it, but you can see that if we continue on, it's getting worrisome. Let's look at the other couple of questions. NAVG, let's see what this one looks like. So what is this? Navigators. It looks like telecom or something. Financial, huh? Okay, I guess I don't know what this is, but it's in the financial sector. Yeah, so this one has a nice push. So the question is get back to the top of the dailies. I don't think you're going to get back to the top. I think what you're going to really want to do is let it come a little bit deeper, if it will. Yeah, because you've got an ABCD structure down here, right, that's already in place, that's trying to play out. And that structure will take it down into this area, which is about where you'd want to take it, right? And then what you're shooting for is this high, right? That's what you're shooting for. With your stop, either you can play a longer term stop down here below this one, which is about a 1-to-1, you can see that, right? Or, and that's the safer one, right? And the safer in the sense that the probability of success is much higher. Or you can just put a stop real tight up underneath it, right? Either way, but you gotta let it come in more. It's not quite there yet. And the last one here that just came in, what is this? PNQI. Let's see what this one looks like. PNQI, isn't that PNQI? I don't know what that is. Let's see what it is. Come on. Where did my screen go over here? Here, I'll just type it in. Oh, here it comes. PNQI. All right, so this one trades. What does this guy trade? Well, it looks like I hit a roadblock here all of a sudden. Hopefully my video isn't dying. Come on, baby, milk it. Something wrong here. I'm gonna get back to my landline on the. Oh, yeah, that's what I thought it was. Yeah, it is the power shares. I thought it was the Qs basically. Yeah, so is it time to buy? No, it isn't time to buy it. Yeah, so you get a breakout, but I can't buy this market up here. Not with Europe doing what it's doing. So if one wanted to buy it, going back to it, you got to take that swing point high. That's the breakout, right? The breakout's today. You got to take that swing point high, and you got to put your stop right up underneath here. You just can't give it anything. If it turns, comes back, stops you out, that's the way it goes, right? You use that bottom of that green area as your stop out, which happens to be the low, which happens to be what, 64.50. But no, I think that there's times where these will work in times where they won't. If Europe wasn't doing what it was doing, yeah, I'd agree. But it isn't. Europe is signaling issues. And those issues, if Europe continues down, those issues are going to bleed over. And I really can't say it any more clearly than that. Folks, thanks for being there. I had a long day. I'm going to shut it down here. We'll get up tomorrow and see what we do. I saw there was a budget deal tonight where they're going to, supposedly agree to something like 25, 30 billion in cuts on top of a $1 trillion budget, I believe it is. So it's like a drop in a bucket, but I guess it will avert a shutdown, which probably for many is a good thing, or viewed as a good thing. But just like most of the things in this market, I suspect this is already built in. I suspect the numbers are already there. The thought that it was going to happen is already discounted. If anything, it's probably a sell the news. Next week's the Fed. Is Europe trying to tell us the Fed's going to tighten? Maybe tighten is the wrong word. Taper? Don't know. All I know is Europe's trying to tell us something, and whatever it is, it's not good. Have yourself a great night. Take care of yourself. I'll see you next time. Until then, I'm L.A. Little, and this is and was your daily TA Wrap. Have a great one. Take care. Good night.